Welcome back to the channel. Today we're talking about one of the biggest expenses for U.S. drivers: car insurance. If you live in Florida or anywhere in the U.S. and you want affordable, reliable coverage, this video will break down the top 5 cheapest insurers in 2026 and help you pick the one that fits your driving profile. We've analyzed the latest data on premiums, coverage types, discounts, and real-world value. So, buckle up and let's get started. Section 1. Why insurance costs what it does. Before we jump into individual companies, a quick note. Average insurance rates depend heavily on where you live, your driving history, coverage levels, and personal details, age, credit, etc. For example, in parts of California, a full coverage policy for a 35-year-old with decent driving history can cost around $2,058 per year in average areas. But in high-traffic, high-cost zones, the numbers can climb much higher. The national average for full coverage auto insurance, as of recent data, is roughly $63 per month for full coverage, though many drivers pay more, depending on state and coverage level. Given these variables, cheapest doesn't always mean best, but if you're price-conscious, some companies tend to stand out. Section 2. The top 5 cheap and reliable car insurance providers, 2025 to 2026. Here's a breakdown of the 5 insurers you asked about, ordered from number 5 to number 1, explaining what each does well and what to watch out for. Data is drawn from recent industry comparisons. 5. USAA, for eligible customers, mainly military members, veterans, and their families. USAA often offers the lowest rates nationwide. According to a recent comparison, USAA's median full coverage auto insurance rate was about $1,499 per year, median monthly approximately $125, lower than most large insurers. For liability-only coverage, USAA reportedly had a median annual rate around $381, approximately $32 per month, among the cheapest in the market. Why choose USAA? If you're eligible, USAA gives very competitive pricing, strong reputation, and overall value. Limitations. Accessibility. USAA's policies are generally limited to military veteran families. So if you don't meet eligibility, you'll need to look elsewhere. Bottom line, USAA can be the cheapest and best value, but only for a limited group of drivers. 4. Progressive is the second largest auto insurer in the U.S., behind State Farm, offering broad reach and many policy options. Their average rates, for many drivers, tend to be lower than some of the premium insurers. For example, a 2025 comparison listed Progressive's full coverage premium at about $2,190 per year for a typical driver. Progressive stands out in coverage flexibility and discounts. They offer several optional coverages: gap insurance, custom parts, equipment coverage, and even pet injury coverage, if you have collision insurance, something many cheaper insurers skip. They also offer usage-based discounts, e.g. via telematics programs, and accident forgiveness, premium incentives if you maintain a clean record. Why choose Progressive? Good balance of cost and coverage options. A solid pick if you want cheapish insurance, but still want flexibility and add-ons. Limitations. On average, Progressive may be slightly more expensive than the absolute cheapest, like USAA or GEICO, especially for drivers with spotless records. Also, customer satisfaction/claim satisfaction ratings lag behind some peers. Bottom line, Progressive works well if you want affordable insurance plus the ability to customize coverage. A practical middle ground option. 3. Allstate tends to be more expensive on average compared to GEICO, Progressive, and others. For example, one recent comparison showed Allstate's full coverage average considerably higher than the others in its peer group. However, what Allstate lacks in low cost, It makes up for in coverage breadth and extras. Their offerings typically include features that some cheaper insurers don't provide, such as new car replacement coverage, accident forgiveness, and optional coverages for drivers wanting maximum protection. Why choose Allstate? If you value coverage completeness, extra safety nets, and are willing to pay a bit more for peace of mind, Allstate is a viable choice. Limitations: not ideal for those on a tight budget. On average, Allstate isn't the cheapest among major insurers. Bottom line, Allstate is more of a value plus protection option rather than a budget-first insurer. 2. State Farm. State Farm is the largest auto insurer in the U.S. by market share. According to some 2025 comparisons, their full coverage premiums tend to be moderately priced. For many drivers, especially those with good driving records, State Farm represents a stable, trusted option. It's widely available across states, and its network of captive agents often means easier local service. Why choose State Farm? Good balance of cost, availability, and reliability, especially if you prefer working with a local agent or want a broadly trusted insurer. Limitations: rates aren't always lowest. Depending on driving history or coverage needs, other companies, like GEICO or USAA, might beat State Farm on price. Also, in some states or regions, competition might give cheaper alternatives. Bottom line, State Farm is a conservative, widely available, safe bet, especially for drivers who value consistency or want a trusted name rather than rock-bottom price. 1. GEICO. This is where many drivers land when they prioritize lowest possible premiums. In many analyses, GEICO offers the cheapest rates for liability-only coverage and among the lowest for full coverage among major national insurers. For example, in one comparison for good driver plus good credit, GEICO's annual rate was notably lower than Allstate or State Farm for similar coverage profiles. GEICO also tends to provide a broad array of discounts, good driver, multi-policy, etc., and easy online self-service tools, which help keep costs down and convenience up. Why choose GEICO? If low cost is your number one priority, and you don't need a lot of bells and whistles, GEICO usually delivers. Limitations: coverage options are more limited compared to companies like Progressive or Allstate. For example, certain extras like gap coverage or custom parts insurance might be missing or limited. Also, if you have a complex situation, multiple cars, frequent drivers, custom vehicle, you might outgrow the basic GEICO offerings. Bottom line, GEICO tends to represent the best price-first national auto insurer for many U.S. drivers. Section 3. What cheap car insurance really means and who it's for. When I say cheap, I don't just mean the lowest sticker price. Here's what to consider. Coverage type matters. Liability only, minimum required by law. Policies are much cheaper than full coverage, which includes collision, comprehensive, etc. If you drive an older car or don't care about full coverage, liability only with a company like GEICO or USAA might make sense. Your driving profile matters. Clean record, good credit. Insurers reward these with discounts. If you have accidents or tickets, your premiums may go up. Some insurers, like Progressive, offer discounts for safe drivers over time. Extras come with price. Want gap insurance, custom parts coverage, or pet injury protection? That tends to cost more, but might be worth it depending on your needs. Progressive or Allstate tend to shine here. Eligibility and access. Some insurers, notably USAA, are only available to certain groups, military veterans. Others, like GEICO or State Farm, are widely available across all states. So, cheap car insurance isn't one size fits all. It depends on what you need, how you drive, and what you value. Cost versus coverage versus flexibility. Section 4. Quick comparison. Who might benefit from which company, your profile, priority, best fit insurance company, You're military, veteran, eligible for USAA. Want lowest possible rate USAA. You want a balance of affordability plus flexible, optional coverage. Gap, custom parts, etc. Progressive. You want maximum coverage features, willing to pay a bit more. Allstate. You value stability, nationwide presence, working with an agent, State Farm. You want no frills, cheapest rates for a standard driver with liability or full coverage. GEICO Section 5. What's changing in 2025 to 2026? What to watch out for? According to a recent analysis, the overall U.S. average cost for full coverage car insurance is around $63 per month, though that's a general average and many pay more. Insurers are increasingly offering telematics-based and usage-based discounts, which can significantly lower premiums for safe drivers and low-mileage drivers. This pushes cost-efficient insurers, like Progressive and GEICO, ahead for many. On the flip side, stricter regulations, rising repair costs, and increasing claims severity in some states, especially high-population ones like California, can drive rates up. So, cheap now may not stay cheap forever. Section 6. My recommendation, based on what you need. If I were shopping for car insurance in California or elsewhere in the U.S. in 2026, here's what I'd do. If I'm eligible for USAA, I'd get a quote there first, likely the cheapest. If not eligible, I'd compare GEICO versus Progressive. If I drive regularly but don't need many extras, go with GEICO. If I want optional protections, Gap, custom parts, etc., go with Progressive. Thanks for watching. If you found this useful, be sure to like and subscribe so you don't miss future auto insurance and money-saving guides. Also, comment below and tell me, what kind of driver are you? E.g., daily commuter, occasional driver, family car, old car, etc. I'll help you figure out which insurer might fit you best. Safe driving and see you next time.